Hey guys, welcome to another episode. For today, I want to talk about the difference between Bitcoin, CBDCs, central bank deposits, actually central bank digital currencies, CBDC. So it's an interesting one. It's acronyms. Bitcoin, what's the difference between Bitcoin, central bank digital currencies, then lastly, stablecoins? Because again, these things are very close, very, very different. Okay, it's important to know the difference and understand the risks behind them. Okay, because again, everything you could argue that everything is all on the blockchain these days. Okay, Bitcoin is on the blockchain, centralized ledger, or central bank deposit. Just gonna call it central bank digital currencies. Are all on the blockchain, centralized ledger. Stablecoin, USDT, USDC, all on the blockchain as well. Ethereum, all these guys on the blockchain. So everything's on the blockchain these days, okay? But you have to be careful, guys. And I say this because, we all know that saying, right? I'm not sure if you know, the sheep, right? The sheep is very volatile creature, very calm, docile creature. However, the sheep spends all this time scared of wolves, only to be eaten by the shepherd. Think about that. So, sheep, everyone knows the sheep. Everyone's scared of, the sheep is scared of the wolf. We're all scared of wolves, especially out there. And everyone goes, hey, be careful of a wolf in a sheep's clothing, the whole lot. Everyone knows about that saying. However, who eats the sheep? Who dresses and clothes the sheep? Who takes off the sheep's skin to put it on? The shepherd. Be careful there. I say all that to talk about the difference, right? And I kid you. So let's talk about who issues these three, right? The difference between Bitcoin, CBDC, central bank deposit currencies, and stablecoin. The issuer, let's start with Bitcoin. Bitcoin, no one knows who the issuer is. Okay, it's decentralized in the sense that, some people might argue that it's, the CIA, but we know that it's a character called Satoshi. And I'll tell you why it doesn't matter. Because a lot of people get into this argument and get into this debate and go down this rabbit hole. It doesn't matter because it's open, okay? I remember the first time as well. Again, I've worked in banking all my life. Maybe I should start with that. So I'm the CEO of Orukka. Orukka has a smart payment ring. It will allow users tap to pay with their rings, okay? So, and I have a fintech app. So Monesave is a fintech app. Monesave, you download Monesave and you don't have a card. In fact, what you have is a ring. So when you download the Monesave app, you could save as a group, okay? Across the world, wherever you are, you can save as a group. And then we have tokens where you save as a group for. But what's important is you're putting the cash aside, and to spend it, you get a ring. Or you just get a ring. So you can actually just order the Orukka ring. Orukka, Orukka. I say that to mention the fact that means we care about customers, okay? That means I look at you as a customer. I offer you what you want. Your bank possibly offers you a plastic card. I don't have one here. Plastic card costs 50p to put together, right? I know because I worked in banking for over 20 years. So I know, how much you want to try to centralize everything. When you order, the next day you get shipped out a card, next to nothing. The bank makes that back in like 1 month, okay? And for us, we just wanted to give something better to customers so that they can tap to pay with their rings, okay? If you want to be cheap, stay with your bank, okay? If you don't care about your safety, stay with your bank, okay? Because again, if someone snatches your wallet, just go get another one tomorrow, yeah? Someone snatches your phone, go get another one. But the trauma associated with that is what we didn't want with our customers. So we said, okay, if you want something better, if you want to walk around with your ring, not just or your phone or wallet just hanging around, put it on your fingers. Or if you worry about your battery life, which my battery is dying, always dies every second, doesn't last a full day anymore. If you worry about that and you want to tap to pay wherever you are, have to pay. No need for batteries. So I say that because we care about customers. That means we don't look at crypto or anything like that. I'm not picking any side here, okay? If I would just want to go through logistically, what's the best way or best avenue to spend or go into crypto and what the future holds as well. So you can learn that from here, at least someone who works on it. So there's nothing to sell you other than my ring. So I don't want you to buy any silly coins. I don't want you to buy any crypto, any CBDC, none of that. We work with everyone. In fact, we're working with central banks now. We're very small. We started 9 months less than. We started 6 months ago. Actually, going on 9 months, between 6 to 9 months, depending on the first ring we ordered. The first customer that walked through our door was 6 months ago, which is crazy. And then the app was live 9 months. So for 3 months, we did nothing and waited around and prayed for customers. And then our first customers showed up, and I personally was excited. And we're picking up, calling the customer, making sure the customer is well. And then firstly, I need to have a whole story around this, but the first customer showed up was in Singapore. The second customer was in the US. And then we had the next one that showed up in the EU. So suddenly we had a full, almost 24 hours of no sleep, where we're just catering for 3 customers. It's a good story I'm going to say one day, right? But Again, the point now we have a lot of customers across 31 countries. But the point is the fact that we care about customers. We're open to anyone. Crypto, Bitcoin, fiat, central banks will work with everyone. As long as you want to ring, tap to pay. No need for wallet, no need for phones. We want to get rid of phones. I have a whole episode on that one. But the future is wearables. So it's either going to be your fingers or your bracelet or just your eye or your fingerprint. And no one's going to care about phones anymore because it's all going to be social media going forward. But let me focus on Bitcoin. Okay, I've talked a lot. So on the issuers, so who centralized, who issued the Bitcoin was crypto, was a Satoshi, whoever that is. Doesn't matter because it's open. So I remember working in banking. They came to us and, we heard about these Bitcoin developers actually were the ones coming to us. And developers had their laptop. I would open their laptop and I'll be like, hey, we just see numbers going through. We're like, oh yeah, these guys are working on my trade. They're working on my sales. We're issuing a new product. Maybe that's what dev looks like. But they're like, no, we're mining Bitcoin. That's how easy it was those days to mine Bitcoin. Developers were doing that. But the point I'm trying to make is it's open source. You can see it. Okay, I can see it. Anyone who's complaining that Bitcoin is fake, there's a fraud, it's just numbers. 2 points to mention to that. Number one is you can see it. It's open source. Number two, your bank is just numbers. Those days used to walk around with cash. Now all you have is ledger entries anyway in banking. I mean, I tell you because I was in, I'm not going to mention the bank. My rounded error was 100,000. So $100,000, if it's an error, I round it up. Just round it, just write it off. That's me. And I think I was just a VP then, 10 years ago. So I was a kid. But I sit down, I'm like, yep, there's an error, 100,000. Now we can't reconcile it, round it up. Pick it out. That's a rounding error, nothing to a bank. My point is the fact that, people worry about Bitcoin being, fraud. That's just numbers and the network. That's what banking is. Banking is a network. The only point is we're segregated by government. So we started, I can tell you, it's very tough to go through government regulation and financial regulator. So banks are actually restricted in terms of how they deal with each country. I'm going to have a full episode on that one. That's interesting. But the fact is, banks are restricted. Fintechs are restricted. But Bitcoin is not. So Bitcoin is open source. You can see how many is there. You can see entries open, okay, which is very, very interesting. On the other hand, stablecoins, let me go into stablecoins. Stablecoins are issued by corporations. I know, which is crazy for people to think about. There's Ethereum. Everyone knows the Ethereum founder. You can see the Ethereum founder. Different from Bitcoin. You can see the Ethereum founder. USDT, so it's stablecoin on the US dollar. So everyone goes, hey, it's 1-to-1 with the dollar. Why is it 1-to-1 with the dollar? The corporation said so. In fact, I remember USDC, okay, it's USDT that was cancelled in the EU. You guys correct me on that one if I'm wrong. But off the top of my head, I remember EU going, we're not going to accept USDT again from, I think it was mid last year, 5. And the idea was that they couldn't prove that they have the reserves to back the USDTs that they're writing and issuing. Does that remind you of anything? Yes, it reminds you of fiat. So everyone's running away from fiat to go into stablecoins. Stablecoins are issued by corporations that are not transparent themselves. Again, I have nothing against those guys, but we work with them. We work with Coinbase, we work with all these guys. But the point is, let's be honest, SDC, USDT, any of the stablecoins equivalents that you're looking at is backed by a secure, you could call it secure, private, you can call it private corporation. They decide how much they issue. They decide what they issue, what's that backed against. And you can argue that they go into an account and the accountant tells them what it is. Okay, fine, maybe not, but it doesn't matter because it's backed by something, which is the same thing as fiat. Fiat, central governments used to back everything with gold until they depegged it. We have a lot of stable coins that were depegged. What are you going to do about it? Nothing. It just crashes. So be careful with that. If you're going to move into stablecoin, know that it's issued by a private corporation. That's one thing that is not known. A lot of people just buy USDC, buy USDT. This morning I was reading about Venezuela. Venezuela did a lot of oil transactions and it was all done on USDT. A lot of people use it without knowing what's behind it. It's a private corporation. In fact, the US are going after them because the US is like, well, so you were selling oil to Venezuela who were turned out to be the enemy and you're a US corporation. These guys are US, mind you. So very, very interesting to look out for. Now, here's the point. So they look out for, or they claim they have a 1-to-1 backing against US dollar. They have 1-to-1 backing against money market funds, against US treasuries. But who issues these US treasuries and cash? The government, central banks. So that brings me to the third comparison, central bank digital currencies. Central bank digital currencies are crypto issued by the central bank, which in my opinion is going to make stablecoins almost useless because you're issuing something and you're backing it against central government issued securities. So what that means is if you look at any of the USDT, they issue a treasury. So they issue a bond that say, hey, we want to borrow money to help the economy. We're going to borrow say 100 billion. When they borrow 100 billion, they pay interest on it about 4%, 5%. That 4 or 5% that they pay is the income that comes in. Now, USDT go ahead and they buy those treasuries from the central bank, from the government. Now, what we are doing with CBDC is that CBDCs now are actually issuing their own crypto. So you get it, the not dilemma, but what's better now, okay? If you're using stablecoin here, I would argue, and this is not financial advice, I would argue that you just go into CBDCs when they're ready, okay? A lot of CBDCs is about, again, I know because we're working with them in terms of pilots, giving them advice as well from what we're seeing on the rings, and how that's going to help them in the future. But I can tell you there's about over 100 countries that are trialing CBDCs. So if they trial that, and they issue the debt, they issue the treasuries, I'm going to argue what's stablecoin for? Only there's a private corporation. So it's a risk that you're taking. You're taking a counterparty risk that those corporations, when they take your dollar, because you're giving them real money, you're taking them dollar. When they give you the dollar and they issue a crypto to you, but that crypto is backed and your dollar is not spent, but your dollar is actually used for something. Okay? It's actually put away so that at some point, if you want to redeem it, you get your dollar back. Or you just go CBDCs, because the CBDCs give you your dollar. They issue the treasury. So that just makes it a lot better. Okay. So let's talk about, control governance. I've said it already. So in terms of control, Bitcoin has no control. It's decentralized. We don't know who issued it. We don't know if there's any change. In fact, if you make a change to the crypto, to the blockchain, if you make a change, everyone can see it. So they can see that you forked it. Ethereum, Polygon, any of these funny currencies that are out there, they forked from Bitcoin. They had a code. Again, if you're a developer, you know what I mean here. If not, don't worry about it. Just think that you just copy the code and make changes. When you copy the code and make changes, everyone sees it. Okay, so this is fully decentralized in that way. On the other hand, stablecoins, you know yourself, it's a private corporation, so they can issue whatever they want. In some places, they are regulated. So USDT is meant to be regulated in the US. USDC is supposed to be as well. But they are regulated in the sense that they are crypto. So it's only as far as regulation drives it. There's only so much they can do, right? So it's really partially, I'm going to say it's partially regulated there. Then the other point now is CBDCs. So CBDCs is fully regulated, in my opinion, because it's a central bank. Central bank is regulated, but it's centralized as well, because that would mean that the central banks are the one issuing it. The same thing as issuing cash. They issue cash, they issue the dollar. Maybe I should have a whole video on this. They can issue a dollar and issue a crypto dollar, which is a one-to-one. But it's the same thing, except that you can see the ledger and it's now at least it's more transparent. It's a lot more real-time because it goes on blockchain as opposed to waiting Monday to Friday. That's the major difference, right? So your dollar, if it's going through a bank, you have to wait Monday to Friday, 9 to 5. By 6 p.m., they might tell you, sorry, it's going to be the next day, or they give you an indicative rate. Okay. On the other hand, if you use crypto, straightforward, you're done. Okay. Or you use a blockchain, or CBDC, go straight through. The question is, why would you use one against the other? Again, nothing here is financial advice. So the first thing is, hey, primarily people use Bitcoin for store of value. Some people use it to make payments. Our ring, we're working with a few people here. I can't disclose it yet because it's not ready. Okay. There's nothing to hide here. I just can't disclose it because it's not ready. So please don't go use it yet. But if you can click on it, you can get on the wait list, or you can order the rings. And then you would see that we are starting, or we will start accepting blockchain Bitcoin shortly. So what that means, if you have Bitcoin, you can turn around and order our rings, and then you can pay with Bitcoin on the ring. In this case, it's converted to $1 at the point you're paying. So if you have a blockchain, or if you have Bitcoin sitting on your wallet, you can transfer it to our app. And then what happens when you're about to pay, we transfer it to the dollar, or whichever country you're in, transfer it, and then you pay in the banking system. So it's interesting because now we have that utility there. I think we're one of the first to do it. Again, there's nothing to cry about here. We're not one of those that go into the media and shout about. So if you're reading this, you can do it. If you don't know about it, then you're not supposed to know. Don't worry about it. We have a lot of customers. We're growing. Okay, but again, we don't want to be inundated. If you're reading this, then go ahead, spend your Bitcoin on your ring. And only those that are supposed to know it. Okay, we're not advertising here. Great point. And then the other point now becomes, why do people use stablecoin? So people I know who use stablecoin in general is to get some sort of exposure to credit, to stay to Bitcoin, but without the risk and the volatility. So Bitcoin goes up and down in value. I talked about Bitcoin to make payments. So when you make a payment with a Bitcoin, it could have gone up 2 or 3% or 4 or 5%, right? So that's a risk that we take as well. When we take the Bitcoin and we convert it, you might lose money or you make money in between. In this case, it's something to worry about. USDT, on the other hand, is supposed, USDC, any of the other stable coins, is supposed to actually give you stability so that when you convert to Bitcoin, you know you have got exactly that amount to spend in the blockchain. So that would mean that you can go ahead and buy dollar, your USDT is 1-to-1 against the dollar. How do they make money? Well, they make money because of what I said earlier. They borrow money from the central bank. They lend money. So they take your dollar, borrow it to the central bank. The central bank then uses that money and pays them interest, and that's how they make their money. They don't give you the interest, right? Some are starting to give interest, but you have to lock the money, okay? So that means you lock it and then they give you a percentage. Again, it's too complex to bring up here, but in truth, that's how they make money, from the interest that comes in when you give them real dollars. And what that gives you then is that you have stability on how you spend. And lastly then is, we've talked about central banks. Central banks full on and digital. Okay. So there you go. So guys, again, I hope that summarizes what we have, the difference between USDT, Bitcoin, and digital euro, digital dollar, any of the central bank digital currencies coming up. So have a good one, and I'll talk to you in the next one. Take care. Bye.